Hey everybody, welcome back to the channel. I just want to give you a quick economic update. It is October 29th, and we're just seeing some crazy things continuing here in both the economy and in the housing market. So I was in an economic update with GPEC this morning, Greater Phoenix Economic Council, and we got some really cool information. I took some notes, so forgive me if I glance down every once in a while to get those for you, but those of you who haven't seen it yet, numbers were released today that show that the U.S. Gross domestic product shot up 33% in quarter three, which is a crazy increase. I think I read something that the previous high was just under 17% back in 1950 Q1. Again, hopefully that's accurate information. That's what I've got, but that's nuts. So with that, they're forecasting anywhere from 20 to 23 million Americans projected to relocate. Now, obviously, that's not just Arizona, but that's all over the U.S. And that has to do a lot with the work from home environments. People don't have to live right next to their offices necessarily anymore. And so they may choose to go and live somewhere that they've always wanted to live, or live somewhere that's better for their family, knowing that they can work from home, teleconference, telecommute, and even travel sometimes. We even heard some stories of people that may still work in LA, but they want to live in Phoenix because it's not as busy. So they come out here and they may fly over there once every couple weeks or whatever just to do their job. So that was pretty interesting to hear. Even with the 33% increase in GDP, there is also still a forecast on the horizon that between 7 and 12% of small to medium-sized businesses are still at risk for closure. So that's still unfortunate, just the rippling effects of COVID earlier, the shutdowns that happened, and just a failure to ramp back up as quickly as we'd hoped for certain segments of business. So what does that mean to us? That means we should buy local, we should spend our money locally, we should really support those small and medium businesses and get the words out. So to that end, we're going to start a segment here on our channel, kind of an around town segment. So I'm going to show you some of the coolest places around Gilbert, and places you need to check out and support, and we'll start that up shortly. So if you're interested in things like that and content like that, go ahead and subscribe to the channel and hit that notification bell so that you know when a new video comes up and you can check it out. As far as housing goes, we're still seeing a huge gap between population growth in the Phoenix metro area and housing growth. So that means we're growing people more than we're growing housing. Therefore, that's why we're starting to see all these increased rates and housing prices shooting up and things like that. Affordability, according to the metrics, is still within the quote normal range, but without the supply coming into the market here shortly, that number could dip out of the affordability normal range. So something to keep in mind. So those of you that own single family homes or are thinking about purchasing one, we've seen a growth since May in the base, what we consider like a starter home, 1,500 to 2,000 square foot single family home. We've seen an appreciation rate at 9% just since May. 9% is typically something we'd see annually, not in a period of about 5 months. So that's pretty crazy. In addition to that, we're also seeing in that same type of home, 1,500 to 2,000 square foot single family home, rental rates are up 12% since May. Again, that's more than a normal annual increase, and we've done that in 5 months. So just interesting things that are happening in the Phoenix market. So for those of you that have heard things about like, oh, we're in another bubble, or when's the bubble going to burst, and those things, and while I can't predict or guarantee the future, what I can tell you is from what we're seeing during the years of 2004 to 2007 or so, before the real burst, we saw values of homes increasing dramatically, which we're all aware of, but at the same time we saw rents going down. What that typically means is because a lot of the buyers that were making that home value increase during that time were not true buyers, meaning they weren't going to occupy the homes, they were investor buyers. So with that, they bought so much housing and the rental demand wasn't there. So we see decreasing rents while the values are still going up, which is a problem. That's forecasting trouble. This year, when you look at the market and you look at the charts and the graphs, you don't see that bubble because we're seeing that sharp increase in rental rate and an increase in values. and actually the rental rate is higher even than the sale value increase. So that's because we're actually seeing true buyers coming in, and we're seeing a lot of those 23 million people I mentioned earlier relocating to Phoenix. The surge in demand actually is assumed to be mostly from California right now in the Phoenix metro area, and we don't see that stopping anytime soon. So what's amazing is we've basically turned a housing shortage in the greater Phoenix metro area into a housing surplus. Or I'm sorry, we turned to flip that around, misspoke. We turned a housing surplus or glut into a housing shortage within a 10-year time frame. And so that's pretty crazy as well. The last thing I want to touch on here is just as it relates to rentals and as it relates to the current rules with regard to evictions. First of all, there's some misconceptions about that. I'll probably shoot another video specifically discussing what the eviction regulations and orders mean to owners and to tenants. But that being aside, that's a whole different discussion. Just know that when these eviction halts or eviction postponements, moratoriums, whatever you want to call them, when they expire, there's a forecasted $70 billion that's going to be owed to landlords as a result of these postponements. What that basically works out to, if you think about it as a per renter number, the average renter will owe $5,400 in late rent, because while they're not necessarily being removed from their homes right now, those balances are still piling up. They're not being forgiven. So what we're going to hopefully see some solutions to, and what we need to look for solutions for, is this potential issue of a mass surplus of tenants being evicted once these postponements are over, because they don't have $5,400 to come up with to pay their rent. So just something to keep in mind. Maybe we'll revisit this at a later time. And again, I'll post another video shortly about the eviction orders and what they mean. Lastly, from an affordability standpoint, we are kind of seeing a big disparity between the minimum wage earners and obviously the higher earners. If you look at the Phoenix market, the average one-bedroom rental is $900 a month. What that means is that somebody making minimum wage is going to have to work 70 hours a week, which is almost 2 jobs, as you can imagine, to afford the average one-bedroom rental in Phoenix. So there's lots of programs available. If you want to comment below about a program that you know of that assists people that may be needing some housing assistance when it comes to making those payments, that would be great. I'd love to talk with you offline as well. You can shoot us a message or give us a call, and if you need any help or need to be pointed towards any of those resources, we can do so. But there is definitely beginning to be an affordability issue that we might see on the horizon. While it's still normal right now, it may not be for much longer for certain income earners. So we want to be a help to the community. We want you to know that you're cared for, and if we can do that for you, just give us a ring. Otherwise, that's our economic market update for October 29th. Hope that was helpful. If you like this sort of content, please share this video with your friends. Give it a like, and we really appreciate you guys for tuning in, and we'll see you next time on the channel.